So I'm going to ask a series of questions, and then when we're done, we'll open it up to the crowd as well. So you'll get your turn also. First question. What do you think is the biggest challenge in the financial industry at the moment, or one of the biggest financial challenges in the financial industry at this time? Who would like to take that question?
Earl's got that one. Okay.
I think international liquidity. I don't think we really understand that we've had some very touch-and-go times with international liquidity, and the ability of the central banks to work together with one another is really critical. I think the second one would be the challenge with regards to the fintech. And I don't mean it in a positive sense. I mean it in an unregulated sense. We have at the present time collateralized loan obligations that exceed what we had in CMOs. And I think you have to watch that. This is kind of the off-balance sheet financing of today. And so, you know, those two things we watch and watch closely besides just economics of foreign countries and what the Fed's doing.
Would you mind explaining what fintech is for those who may not know?
Well, fintech is where you're taking digitalization of the financial markets or financial activities where, to a large extent, you have folks that will use mobilized means to do banking, that's pretty common. Mobilized means in which they can make deposits on non-bank type entities, and then those entities will make loans, and then they oftentimes will bundle up those loans. There'll be collateralized loan obligations, and that's part of the fintech at the present time I'm referring to, and that's about $1.5 trillion, maybe 1.7. I don't know if it's maybe higher than that now. But that's, believe it or not, folks, that's more than what we had in CMOs when we had the CMO problem in 07, 08 when we had the Great Recession. And the covenants in that area are really weak. So if we had a poor economy, well, let me just add on to that. I know I'm going to bore the heck out of all of you. ETFs, to a large extent, own those assets. And the ETFs, if you all of a sudden had a rush on the sale of ETFs in that arena, there's a real question of liquidity to be able to handle all of that. So let's hope it doesn't happen, huh?
What I would add is knowing when to say when. Thinking about the last recession, we as banks lent too much money, we gave out too much money, and that bit us. And so we've been very prudent with our underwriting and how much leverage that we provide to companies that are requesting debt. And again, Earl and I were talking about this earlier, that, you know, what is the next catch? What is it, whether it's real estate, whether it's too much debt with other operating companies? We don't know that. So it's really going to be a test of time to see what is the next catch.